Good morning. What's up, guys? How we doing? I'm ready to rock here today. Now, business first, as usual, as people kind of come in here. So, as far as headline news, there's really not a lot today. We have a few Trump meetings starting at 10:30 Central, and those will go probably until about noon Central. But I gotta tell you, based on the nature of these meetings, there's like a lunch meeting. I don't know. If we get tariff news, so be it, but I'll be having my live stop orders out anyway, so it won't matter too much for me. But I'm not expecting too much news today. Now, of course, we can get unscheduled tariff stuff that no one sees coming, so keep an eye out for that. But as far as scheduled like data releases, we got the US trade balance at 7:30. That's it. It's out of the way here for today. So we are free and clear to trade to our heart's content. What's up, guys? Bricko, good to see ya. Peter, Scrumptious, Kings, what's up, guys? What's up, guys? All the regulars pouring in first. What's up, Gaines? What's up, Rick? Mitz. All right, market is down about 1.3% here so far today. Good volatility. I mean, you look at the 5-minute chart, top left of your screen. We're putting in a pretty good pre-market channel here. Now, again, the pre-market channels, I don't put too much weight on those after the bell rings. I like to really wait and see kind of a new channel development or continuation, obviously. Now, market inertia-wise, same deal as yesterday. Really nothing has changed. Honestly, if not a little bit, I'm a little bit less after the last 2 trading days, well, really 3, willing to take breakout bets just because we've seen so many failures the last couple days. Like yesterday's New York session, this is only showing the New York session on the bottom, the daily chart, whereas the top is, of course, showing everything. We just have seen so many failed breakout attempts. Now, in a typical range market, it's going to be maybe like 80 to 85% of breakout attempts are going to fail. And we have certainly been seeing that. It's been maybe 85 to 90% the last couple of trading days. So I'm heading into today, market inertia wise, reminding myself, okay, this probably isn't the market unless something shifts intraday, which of course can happen, to be betting on big breakouts, like on the outs, like taking continuation setups right at like an ascending resistance. I wouldn't do that here today. If it broke out of the ascending resistance, I would. If there was plenty of room for me to hit target before the ascending resistance, I would take a continuation setup if it's set up. But we got to be careful in a market like this because, again, this is a range-bound market. A lot of people don't really understand what that means. It doesn't mean it has to go sideways. It means that there's a lot of wicks, and it means that a lot of breakouts in either direction are failing. Lee, for all of our traders that use NinjaTrader, I'm going to be posting some indicators I've been working on in our free Discord. Cool, appreciate you doing so, Lee. We can crowdsource a whole bunch of tools. It just helps everybody. By the way, if you guys, it's just 100% free, the Discord. It's just a place to hang out. If you want to join that, it's in the description. And then come on back. Lord of Fuse, good morning. Javaz, what's up? Trev. Yeah, Trev says yesterday was tough. Yesterday was kind of it was slow, I'll say. We got teased a lot on stream. There were maybe 3 or 4 trades that I was ready to hit the button, and then in the last 5 or 10 seconds, things shifted. I had a limit order out at one point, actually, and I had to cancel because things changed during the trade. Afternoon yesterday, I took 1 trade. I ended the day small green. It was really no big deal. Superfly, good morning. Chris, welcome back. What's up, guys? Gene. Jude, good morning. Michael says, luckily caught a put end of day yesterday for a small profit. Felt like gambling, though. Yeah, listen, if you feel like you're gambling, something inside of you is telling you that you didn't have enough data to take that trade. Or you don't really have a plan. Okay, because you have to, at some point, you're going to have to test without data, right? So, in the early days, you have to have some kind of a setup that you're like, you know what, so-and-so, this is a setup that makes sense in my brain, let me test that. And then you borrow the confidence from the fact that you're gathering data for the first week or two, and then once you start to backlog some data, it becomes a lot easier to be confident, because you're like, well, okay, it seems like there's a such and such % edge here on this setup. In the last couple weeks, at least. That's a good sign, right? Let's see if that holds up. And now you have some confidence. Cameron, good morning. Ejecto, good morning. Pat. Marshall, how you guys doing? Peter says, what worries me is breakouts fail until they don't. You're absolutely right. And when they stop failing and they start succeeding and we enter a trend market, you have to shift as early as you possibly can. Maybe you'll take a couple of losers, or maybe your win rate will start to fall as that shift occurs, but you don't want to be a week and a half behind making that shift from range-bound mentality to trend mentality. When the market starts to shift, the quicker you can recognize that and change your understanding of what the market inertia is, the less money you'll lose. Well, I'll say the more you'll hang on to, okay? And then the quicker you can get back to having an edge, because you make that shift when the market called for it. Obviously, you're not going to be able to make it. There's the bell. You're not going to be able to make it immediately because you have to actually watch that shift occur, and maybe you'll lose edge for a little bit or lose some edge for a little bit, probably not all of it. And then you can get back to normal once you make that shift. But right now, I'm thinking range, with continuation if the timing on it is right. Joe, welcome back. What's up? Dale, welcome back. How you guys doing? Would you say ATR is generally lower when market is in range? Yep. Sometimes you can end up with a trend market where it's kind of one of those melt up trend markets, but I would even hesitate to call that a trend market unless we're seeing big moves and it's not really a melt up. It just looks like a melt up because the move is so big. You know what I mean? Like if you have like a 6% green day and it grinds higher all day, it kind of looks like a melt up when you look at the chart, but it's not really. The range on the bars is bigger than it looks because everything's bigger. But yeah, oftentimes in range-bound markets, especially in the afternoon, ATR tends to fall. And by the way, if you're just joining us and you're like, what the hell is he talking about, ATR? Average true range. That is, if you look up top, represented by the blue flag hiding underneath the yellow flag at the bottom of your screen there. It tells us the average range in points of a 2-minute bar based on the last 10 2-minute bars, and then the yellow flag shows us the range of the last bar. So I think it's interesting, important, helpful to compare those two. Tell us how volatility's kind of working itself out. But yeah, I don't know if you guys saw yesterday in the afternoon, I was sitting here. I had just taken that one little trade, and I was sitting here maybe 2:15 Central, and I look up and I was like still kind of planning on taking some if it presented itself, and I looked at the ATR, and the ATR was like 9, and I closed the platform and left. It was shocking. I have not seen below 10 in probably over a month, at least during the New York session. It was kind of nuts. Yeah, so that ATR being at 14 on market open, that's because we haven't averaged in 10 after open 2-minute bars yet. Okay, so it's going to creep up usually into about 850, and then from there, you kind of see what ATR does. Again, right off the open here, just got to let these institutional orders kind of clear themselves out. And then we can get to our intraday mentality. Well, yeah, Pumple says mostly channel scalps here then today. We'll see. We'll see. Again, when I say range day, that doesn't mean that continuation's off the table. I know you guys understand that, but it means I have to be more careful taking continuation on the outside of the range, if that makes sense. Oh, hold up. Give me 30 seconds. I got to go from Wi-Fi to Ethernet. I hate trading on Wi-Fi. 1 sec. All right, we are back. Stream all good? No issues on the transfer of internet? All right, cool. Thanks, guys. Gain says the anticipation of rushing into the market is something I have to practice for sure. I'm still learning not to rush into the opening bell. Yeah, listen, guys, here's the problem. The opening bell, there's a whole bunch of backlogged orders that just need to get done, okay? And you have to understand that the outlook on those orders, now, obviously, that's happening all day, okay? But there's a lot at the bell and the 10 minutes that follow, really. The problem is a lot of the outlooks there are for weeks out, maybe months out, at least days out, oftentimes, right? These are bigger positions being built out by institutions, some of which will be closed today, a lot of which won't. So, if the opinion of the trades off the bell is a bigger opinion than I'm interested in, meaning they're looking at like, well, you know, I think we're going to be back up toward 21,000 in 3 weeks or whatever. Or, you know what, I think we're heading down toward 18,000 in the next few weeks. If that's what they're saying, that's not what I'm trading. So I got, when that takes over the majority, that longer outlook is the opinion of the early trades. I got to hold off. I don't even think I can get too much edge. Right off the open. So let those clear out, and we are coming in pretty soon here to time to rock and roll. Exposed, good morning, Brandon, John. What's up, guys? How we doing? Joseph, good morning. Let's go. Now, again, just an update for anyone just joining us here. As far as news, like data releases today, it's already out of the way. We're good. We're all set. We got the U.S. trade balance at 7:30. Aside from that, we're pretty much free and clear here today. Trump has some meetings starting at 10:30 Central, going through, I would guess, maybe until about noon. We might get some random tariff headlines coming out of that, those two meetings. Well, it's really one meeting with multiple events. But it's like a lunch and stuff, so I don't, who knows if it'll even be covered. But be on the lookout, starting at 10:30 Central for maybe random tariff headlines, but until then, as far as scheduled data, we're all set. And yeah, tomorrow's a big day. We got FOMC. All right, now you guys see this. We're getting a whole lot of wicks as we come into the top end of what was that pre-market range. You see on the 5-minute chart here. Now, again, pre-market ranges to me mean a little bit less once the market opens. But we got to go off what we have. Doesn't mean I would like short the top of a pre-market range just because it's a pre-market range. All right, now yesterday's New York session low, okay, was 19,985 and a quarter. So 19,985, we're about 125 points away from that right now, is an area to watch. However, really the area to watch, if we even get to that point, is obviously the S tier level of 20K. That's a big deal. But I got to tell you, as a trader, forget being an investor for a moment, okay? Unless you think the U.S. is going belly up, like we're good long term as far as the investing. But let's think as traders, because we're all here as traders here this morning. I would love to see this market just tank. I mean, I gotta tell you, we were having the same conversation maybe 5 weeks ago. We got it. We got more than we bargained for. But as a trader, I would love to see that happen. Just get volatility going, maybe smooth things out. Lately, what we've been seeing is a lot of smooth movement, lower volatility smooth movement, and then boom, big, giant, random bars on tariff news. A downside push would smooth things out. Okay, now for the sake of the country, obviously, there's two sides to that coin. It's like I don't necessarily want to see that occur. But if we're thinking about, well, what do we need to happen here as traders? That wouldn't hurt. Offers you more opportunity to generate some revenue and then gives you cheaper prices to drive it back into the market. But today's the 4th New York session in a row that we are kind of struggling around 20K. All right, we're getting into the 840s, so in a couple minutes here, we can really start thinking about putting some trades on. That big wick, goodness. Goodness, these bars, by the way, the ranges off the open have been anywhere between 18, 19, and about 40. Which goes to show, I should say, goes to support my earlier point of volatility could use a little bit of work here. A 40-point range opening bar of the New York session is not big. Hopefully we can maintain some decent volatility, well above 25 on the ATR throughout at least most of the morning. If we can do that, then I'm cool with it. But if we start to fade into the teens early, like within an hour of open, not ideal, but we can work with it. And now, the lower that ATR goes, the heavier I just lean into negative reward or risk strategies until the ATR starts getting like below 12, 10. Then it's time to walk away at that point. You see here off the open, there's a lot of arguing going on, right? These wicks shows us quite a bit of arguing. Now the bulls are able to push it a little bit higher, but not without a fight being put up from the bears. I mean, you see these wicks back down. Those bears are stepping in when anytime this thing goes higher. Again, that's very representative of a range market. When you start getting more of a breakout market, more of a trend market, the other side usually kind of, you can see it in the price action. The other side lays down a little bit more. You get less pushback on moves in one direction. You get less wicks in the opposite direction of the move. And you get more wicks, but maybe smaller wicks in the direction of the move, if that makes sense. So in an up move, you would get small but frequent wicks on the bottom of the candles, and probably less wicks on the top, just because the bears are kind of stepping out of the way. Melissa, Josh, good morning, guys. How we doing? Bill, good morning. All right, there is 8:45, so let's get to work. Let's see what kind of setups this market will bring us here. It's time to start trading if we can. I mean, first thoughts here off the open, we're seeing the market's trying to put it in a little ascending channel, but I gotta tell you, it's ugly. It's real ugly, and we haven't really had any continuation. Potentially a flat top forming there up top, which, by the way, I don't trust flat tops too much. They very much so tend to break, especially when paired with like an ascending support, or maybe if you have a flat bottom with a descending resistance. The flat tends to break maybe 55% of the time, compared to 45 on the ascending or descending level. Goodness, what just happened here? Random news, look at this. Look at this. This is why you gotta be careful, guys. No headline yet that I'm seeing. We gotta run live stops, right? That's why that's so important here. Not that I was in a trade, but I'm saying it's just so important here to run live stop orders, because that's what we've been seeing. We've been seeing that daily, multiple times daily. There's no way to avoid that. You just got to be careful and protect yourself. You can't. Trading naked is a bad idea right now. Yeah, maybe that was Quicksilver, huh? Man, what an ugly bar. You know, you get those moves. I promise you, we had a whole bunch of bulls buying. They're like, this is an ascending support. Maybe not paying attention to these obvious wicks. And then you get one little headline, whatever it was. Take out all those stops and you keep pushing. Probably taking out all these stops too. Maybe swing traders trying to get long. Selecting lows. I know there's a lot of stops down here. Better believe it. Sorry if this has been asked before. No worries. What are you looking for when trading in ranging markets? I'm looking for channel development. I'm looking for breakouts of the range with a continuation sequence. My 2 to 3 consecutive bars. Entry bar closing at or very near the high. And ideally same size, if not growing bars, not shrinking bars. And I'm looking for continuation sequences developing inside of wide ranges, with enough room to the other side of the range for me to hit target. That's what I'm looking for. All right, now you guys remember, we just talked about this, right? A lot of stops I know are down here. So if we see a breakthrough there, it's probably good for at least a 10 or 15 point push. But you'd have to break it hard enough to trigger those stops. We got shrinking bear bars here, obviously. That one bar was on news, so it's a little unfair to compare. I'd be open to stop hunting this, actually. We got 1 minute and 38 seconds until the rollover of this bar. Now let's look here. Man, it's weird, because you look at these bars, they look huge, but they're not. This whole bar, the range on it was not even 50 points. All right, we got a minute 10 until the rollover here. Now, again, if we get a clean close ahead of this wick here, there you go. There's the push. Guess we didn't get it. So there's the stops getting triggered. We just talked about this. And what did we get? Well, we got a 15-point push. You can see why I'm a big fan of hunting stops. Didn't get my setup there, but there you go. There's the stops getting triggered. Well, I gotta tell you, I can't complain. This is lighting a fire under the market. At least a little bit. But I would love to see this thing enter a little descending channel. I would just short a descending resistance all day. By the way, a little retest of that previous level where the stops were is not uncommon here. We may end up seeing that. You got to be really careful looking at these last 3, 4 bear bars and considering them for continuation, because you have to understand that that first bar was triggered on news. Okay, so to gauge the size of a take profit, you don't want to do it based on that first bar. So you're left in a scenario where you're kind of forced to look at the following bars. However, that last bear bar we had, it grew. Why? Because of all those stops that helped push it lower. Okay, now this bar, we don't have that rocket fuel. We don't have the news, at least that we know of, right? You can get random news anytime. We don't have really stops anymore because we're now at low of day, essentially. Benny says it's standing on top of the May 1st low. Yeah, that May 1st low is sitting at 19,757 and a quarter. So we're just pushing through there now. Got a minute 15 out from the close and rollover of this 2-minute bar. Bulls are going to step in and try. It's a range-bound market, okay? So we're going to get bulls stepping in at some point here and trying at least. Gotta tell you, I kind of hope that they succeed a little bit and then we fade, okay? Because we have to let the bulls at least try, because it's a range-bound market. They're going to want to step in and try and buy the lows, because they're saying this breakout's not going to work. You know, 90% of breakouts have failed in the last 3 or 4 trading days. So I would love to give them a little bit and then fade it lower, because that would open up some great opportunity for downside continuation setups to happen. Whereas if we just kept going lower here, it's tough because the bulls never get their shot. I want to give the bulls their shot and let them miss. Ideally. Well, here's the bulls taking their shot. All right, bulls taking their shot. Bears now stepping in and wicking this back. I mean, to a T, this is kind of what we expect. All right, now that 20, well, that 20 EMA on the 5-minute chart is currently just below 820. It's at about 817. Now, the reason I bring that up is to see, well, would a potential, if the bulls end up taking this a little bit higher, is there even room? There's room, but it might be kind of tight. And I gotta tell you, that wouldn't be my ideal trade, but I would have to put it on if it presented itself. All right, bears took their shot. I'm sorry, bulls took their shot. Now bears are stepping in. I'm trying to tell them it's not happening. All right, now in this down move, if we could get a nice close, let me think about this. ATR is sitting at 24. Okay, so if we could get a nice close on this bar in the next minute, 25 seconds when this rolls over. At the low, see the overarching picture is a down move, mushy bull bounce, 2 consecutive bear bars, growing. We can get this closing near its low, below the previous candle wick. I don't want it to get too big, but this would be about the right size. If we can get a nice clean close, we'll see if we can. Obviously, I don't want this to wick back up last second, or obviously back above this previous bar's wick low. So we'll see if we get that. We have 50 seconds for the bears to step in and clean this up, but I would sell that. $35 seconds. We'll step it in. I don't think the bears are going to give it to us, are they? Yeah, that setup didn't even come close to giving it to us. Jack, good morning. All right, nice big push upside here out of the bulls. Again, for the sake of volatility, I would love if the bulls failed here, but I don't care. I don't have a bias one way or the other, aside from just, hey, if we go down, we'll get more volatility because it lights a fire under the market. That's the only reason I really care. Now remember, that 20 EMA on the 5-minute, which is heavily watched, is now sitting at about 813, 812. All right, we got 30 seconds on this bar. We can get a nice high close, like up toward 19.8 out of this bar. Bulls would really have to step in here. Then, obviously, looking at the 5-minute chart here, we would need a rollover and a push up through the 5-minute 20 EMA, and then I would buy, but the bears are stepping in, wicking this back down. Again, arguing. This is a range-bound market. This little arguing is going to happen often. Wicks, right? That's how you determine, hey, are they arguing back and forth, or is one side kind of laying down? The wicks tell you the whole story. Peter says, you consider this range bound and not a down channel. I would say those two are the same thing. Well, I think a lot of people assume, I've gotten this question a few times, I think a lot of people assume that range bound has to mean like it's going sideways. I don't think of it that way. To me, you can have a range bound day that's up 3% or down 3%. It's just a lot of back and forth with a very clear drift, one way or the other. But in a range-bound market, even if you're up 3% by the end of it, most of the breakout attempts to the upside intraday are still going to get shot down, even though you have positive upside drift. All right, getting a rollover here pretty soon. All right, there we go, bulls. You can see that? We closed right at the previous bar's wick, just below it. That tells us the story. Okay, now. If this bar can see a close at 8:15, $8.15 to $8.20, maybe $8.15 to $8.25, in that range, then I would buy the rollover of this bar. Let's see if the bulls can show a little bit of backbone here. And again, that would put us above the 20 EMA on the 5-minute chart, which is what I'm most interested in. Just because it's heavily watched. I know people are looking at it. All right, 50 seconds out here. Gonna close up in this region. Would be an absolute buy setup for me. Bears are holding us down here. Let's see if the bulls can step in and fix it. You end up with a big wick on the downside here. Let's see. Okay, here comes the rollover. So the bears are attempting a little reversal sequence. We'll see if they can pull it off, or if the bulls just step in and rip us higher. There's the attempt. A little bit of a flat top going on here on the 2-minute chart. Right here. This is the test of the 20 EMA on the 5-minute. A lot of people watching that. It's a very popular moving average, so got to pay attention to it. By the way, it's not, if you're a little bit newer here, understand, I would never take a trade off an EMA just because it's the EMA. I use it as a supporting factor. It's not good enough. I tried to make EMAs work years ago. I ran a bunch of data. I tried to make them work, and I couldn't. They're just not relevant enough. Now, people watch it on the 5-minute 20 EMA, enough for it to sometimes be a hang-up, for sometimes to cause an issue, like if you're entering right into the test of one. But as far as taking a trade off of it itself, it's just not good enough. Okay, that was a decent rollover. That was the rollover of both the 2-minute and the 5-minute, by the way. Here we go, back test of the 20 EMA on the 5. Very common to see a quick little back test like that. All right, this bar is important to me. So if we could see, let me think about this. If we could see a close up in this region, I'd put that on. Even with volume weighted average price being kind of right ahead of that. I gotta tell you, with ATR sitting at 27, I'll have to manage these trades as they come. I'm not against leaning into negative reward or risk even early today because that ATR is kind of tight. All right, bears stepping in and shrinking this bull bar, wicking us backside, kind of turning into a little bit of a doji here. We have 30 seconds to clean this up. Big shrinking bull bar. That's not good enough for me. Not good enough for me. Vinny says, Wrench, do you use the ATR as an indicator of strength as well, or just candle size and therefore probability? No, I use it as an indication of, hey, did we just get news? Is there something I'm not seeing? Is someone making big orders that are not going to last? What is the ask that I'm making out of the market compared to what the market has been delivering on? Okay, so if the ATR, by the way, is 12, and I'm putting on a trade with a 40-point stop and a 40-point take profit, by the time I get to either of those, my trade idea is probably out the window anyway, because it's probably been a long time. Because volatility is just too low. Now, if volatility is, ATR that is 140, it's like things are really whipping, and entering with a 30-point stop, 30-point take profit you're probably risking just getting chopped out just on whippiness. So I use it for context is the word. Now listen, guys, this is a range market. You see, we're getting shrinking bull bodies. Bears are stepping in. They're saying, hey, we're getting kind of high in this range, don't you think? And they're stepping in. Very common. By the way, this is actually a setup that a lot of contrarian-minded traders would take. You see the shrinking bull bodies, right? That's the very early stages of an attempted bear reversal sequence. Now, the probability is not nearly as high as like a clean continuation sequence. But if you're a trader who trades low probability, high potential reward to risk, that's the kind of setup that you'd probably be after. Hey, Corey, appreciate you. Now, this channel here, this little descending dual touch point channel, I mean, you see, it's very clear here. If we look at this, let's look at this. Right, I'm a 3 touch point kind of guy. But people are going to make that argument. There's not enough up here for this to be set in stone. Though this is pretty much set in stone. But buying descending supports, remember, a little bit lower probability than buying ascending supports. Selling descending resistance levels once they have 3+ touch points, at least 2 clean touch points, are higher probability than selling ascending resistance levels. Because the timing has to be more perfect when you're going against the trend, if that makes sense. So I'm going to remove this, leave this downside one since it's a little bit more set in stone. And we'll see if we can kind of break out of this little top here. There you go. There's the push through the top. Hunting some stops, wicking back. Those stops were good for a 10-point move, 11-point move. 10. Now, okay, quick heads up, guys. If you look at the 5-minute chart, this here is a pre-market level. Now, I like to hold off on using pre-market levels for actual trades, but I just want you guys to be aware, some people are going to see this. Okay, right around 880. We'll see if it's enough to make much of a difference, but I might as well make you aware of it. All right, we have a minute and 10 seconds until the rollover of this 2-minute bar. If we see a close at the high of this bar, I will buy the rollover because that would put us outside of any bear argument, at least obvious bear argument. And I want the bears feeling awful about themselves when I enter long. But we got to see the bulls show us some backbone here because the bears are stepping in and bringing us back to that trend line. All right, we got 28 seconds until the rollover here. $12 seconds. Oh, you ready here? It's gonna come on, bulls. Take us higher. Give me a nice clean close. It's a little ugly. I'll give it 15 seconds. 15 seconds, give me a little bit of a pullback. 10 seconds left. A little bit more. Hands off. All right, same idea applies on this next bar. So we got a minute 30 until we get to make another decision. Ideally, we get a nice clean close. That last close, I got to tell you, was kind of ugly. Nice work, Joe. Enjoy the day. You can see here, the bears came in and kind of wicked that bar back downside. At least the bulls were trying to get that bar higher. The last bar, that is. And the bears came in, wicked us a little bit lower. So now, again, same idea here applies on this bar. We are 45 seconds out from the rollover of this 2-minute bar now. By the way, we do have a little bit of a level pre-market that we're testing currently right around 908. It's a pre-market level, so I'm not too concerned with it. We've got 30 seconds. If we can get a nice clean close, I'll buy the rollover. No big wicks downside. Right now, half that bar is a wick. All right, we got 5 seconds. Look at that. That's half a bar of wick. All right, same idea on this bar applies. Because remember, we were down in at lows, and I talked about how bulls are going to try step in and at least try. we're going to see that with the bears here. And here they are, stepping in, at least trying. In a range-bound market, the bears aren't going to lay down without a fight. "35 seconds. "10 seconds. Bears stepping in, wicking us back down a little bit here. There's the rollover. All right. A bull bar here closing above the high at its high. Similar, if not growing size compared to the previous bull bar, would be an entry for me. Though we are developing a flat top and trading sideways here in the last 5 or 10 minutes. All right, let's clean this up. No use for this anymore. All right, baby, we are sideways right now. All I need, we can go, the beauty of using the 2-minute chart, the beauty of trading the way that I do is that we can go from nothing on the horizon, which is gonna happen a lot of times, to having a beautiful setup in 2 to 4 minutes. Right now we got a flat bottom and a flat top, and these right here, little channels sideways with flat bottoms, flat tops, these are absolute 50-50. Betting inside of this thing, I think, is a waste of energy. Okay, is there a name for the strategy you use? I wouldn't call it. I would call it a theory of market pricing, is what I would call it. I believe the futures market, and provably so, it's not really a belief, this is just fact, is very efficiently priced, but not perfect. Okay, so the continuation setups, the channel setups, you take that idea plus the best real-time read you can get on buyer-seller relationship, plus the self-fulfilling prophecies of very obvious channels. Ascending or descending channels, not flat channels. All right, beautiful. Here we go. We're breaking out of that little flat top there. Let's see if we can get a nice clean close at the high. We got 1 minute and 10 seconds here. Pulling on back for a retest of that little flat top. You see that? "45 seconds. I will get ready just in case. I gotta see a push higher out of the bulls here. Cover that wick. So close at 920 or above. We got 10 seconds. Same idea applies on this next bar here. ATR settings, yes. This is Ninja. The settings are just a 10 period ATR on a 2-minute chart. That's it. And I overlay the range on top of the ATR in the same section at the bottom. Those are two different, I don't want to call them an indicator because it's just data. Those are two different data displays in one section. And Bear's tearing it back down into the little range here. This little bickering is kind of frustrating. Not a lot of setups going on here so far. But we are just getting started. All right, remember, we still have that flat bottom, okay? On the 2-minute. All right, big flat bottom again at 880, 881. There's a little ascending. You could make an argument for an ascending resistance. So if we could see the bulls push through that argument and give me a couple of consecutive bars. Again, being in a bigger uptrend on a zoomed in mentality, it only really takes two for me. Jacko, I made 200 bucks during Asian market and did something crazy, locked myself out. I usually lose it, thinking it's a cushion for bigger trades during the session. Well, what'd you do that was crazy? And yeah, by the way, that's not a good mentality. If you're an experienced trader and you build up a little cushion in the morning and then you're like, all right, the market's really, like, my edge shines in the current market conditions, and then you want to hit it a little harder, feel free, fine. But I think for until you get there, until you're like advanced to that level, I think that mentality is just going to hurt you because it allows you to do gambling things. Okay, whereas someone who's more experienced, if they build up a cushion, they're like, they can recognize, like, these are the conditions where I do really well. And they push a little harder, and you know what? If they go back to break even, whatever, they leave. Or they push and have a record day. Now, again, I think a lot of intermediates think they're advanced, and they start doing that, and then that gives themselves permission because they're like, it's house money. It's not house money, it's your money. It's already closed, it's realized. That is your money. You're just thinking it's house money because it's the intraday P&L, but that's already your money, even though it hasn't necessarily settled yet. All right, now we are forming a bit of a channel here. It's kind of tight, but let's see here. As far as channel width, we're looking at maybe 30 points, which is not too bad. Looking here, drawing this trend line is a little bit tough, but it's there. ATR is now below 25. It's at about 24. So I'm thinking about a little channel scalp there if we get it. What would that be? Maybe about 98, 95-ish. I'd lean into probably negative reward to risk here. Let's just see if we get that, if we get a clean test. Come on, market, I'm ready to rock. Give me a test just below 19.9. Well, we're getting nice pushes off that area. I drew my level a little bit more conservatively because I know that there's going to be different ways to draw this. Right? If you were more aggressive, you could actually draw it like this. Right? But I prefer to be more conservative on my trend line drawing. But don't overthink it. That's the worst thing you can do. Overthinking it's the worst thing you can do because everyone else is not overthinking it. And you're trying to see what they're seeing, right? You're not trying to create some magic. Lee, back. Nothing like getting pulled into a fire drill when I'm trying to trade. Stupid work. Tell them fire safety can wait, baby. The market's going. We're open. All right, now I got channel scalps and continuation on the brain. Clearly, bears are going to see that. Let's see if we end up pushing right through. Seems like this market wants to make a test at 20K. Again, that's an S tier level. Being around 20K makes our job, honestly, a little bit more difficult, though we can use it one time per day after the bell to hunt some stops. After that one test through 20K, whether it's through to the upside, through to the downside, the level with each additional test starts to lose relevance because there's less and less people managing risk based on the level because it's getting tested more often now intraday. Right now, ideally, there would be like a top or bottom just ahead of it. We had a trade like that last week, which ended up being a beauty. But hopefully that won't even come into play too much here today because that becomes kind of a frustrating area when you go right around 20K and test it all day long in a tight range. Looking for a retest though, this little ascending support. Again here. All right, see if we can get a nice little test there. A little bit more. There, and I'll enter long on that little back test of that ascending support. No rollover coming on this bar for a minute 30. So average price on that trade, 19,903 and a quarter. Stop down at 19,863 and a quarter. Take profit up at 19,943 and a quarter. Currently sitting about 5 points in the red. So take profit up at 943 and a quarter. Depending on how many bars this would take, that would put us pretty much right at the high. So I would maybe thinking about managing this a little early. We'll see how this ends up, how the price action ends up moving. Currently about 7 points in the red. Okay, now if you get that rollover on the 2-minute, now you have to deal with a retest. Okay, we had a trade just like this. Maybe early last week, it was just like this. I gotta tell you, it's not my favorite position when you start forming a little flat bottom there. But let it work for now. Well, back in the green on the trade, just barely. Kind of break even. All right, here comes the retest of that previous ascending support level. Currently sitting about, I don't know, a couple points in the green. All right, 5 points in the money. Again, here's the retest of the previous ascending support. See if the bulls can push through there. 10 points, 12 points in the money. All right, let's see where we start to have some problems. Now again, initial take profit is up at 19,943 and a quarter, but we'll see if I end up having to manage early based on the average true range. Again, ATR is currently sitting at about 21, 22. Five points in the money. Bears trying to push us a little bit lower, back to a couple points in the red. Break even. Now again, average true range here is down below 25. We're at about 22 as it currently sits, so I fully expect this trade to kind of take its time a little bit. We're a couple points in the money right now. All right, that's the 11 a.m. Eastern bar. A little bit of volatility on the rollover. It's expected. All right, we are 13 points in the green. Now again, if you're just joining us, we are currently sitting long at 19,903 and a quarter. Stop is way down at 19,863 and a quarter. Take profit here up at 19,943 and a quarter. 25 points in the green. See if we can break this previous little high and push us right to target. Now again, with ATR being what it is, 20 right now, currently at 20. I absolutely could manage this one early. I'm going to let it work for a second. That might change here quickly. Kind of just want to see a test of those highs. We've pulled back on the highs long enough now where we may see some stops up there. And since the current high is 19,937-ish, I really only need 6 additional points as a push through the high to hit target, which could come from stop orders. You know, if it were 15 points, I'd probably be managing this one maybe already. But I don't need much when we take out those stops. Now again, there's not a million stops loaded up here. It's really only been, what, 15 minutes? There's going to be some. $20 points in the green. Come on, Bulls. Just give me a test of that little intraday high here. Right around 937. Take out a few stops, push me through 940 up toward target. 943 1/4. 25 points in the green. There's a test of 930. Again, fully expecting this trade to take a little longer than average, probably quite a bit longer than average. Just because that ATR, that average range of a bar is way down. We're at 20 now. Higher High says, do you move your stop loss to break even? No. I only do so if I'm running a low probability, very high reward to risk strategy, where it makes sense, usually not with prop or with static prop accounts. But moving stop to break even, in most cases, in almost every case, has been studied extensively and has shown in basically every study to be nothing more than a data different. Sorry, it makes your data look different, not necessarily better or worse. So what it ends up being is a psychological protector, which I don't feel I need at this point. But a lot of people need that, so feel free to move to break even. I'm not going to. Still sitting about 21 points in the green. Again, target up at 19,943 1/4. I'm letting it work. I have full permission based on my plan to manage early. But I want to see a test of that high. Again, it's at 937 is the current intraday high. And I think that taking out a few stops could push me at least close to target. So I kind of want to see if I can capture that. Again, fully accepting I still have risk on, of course. $25 points in the green. Here's the look currently. It was a little flat. ATR is now below 20. It's at 19.4, which is very low. Love to see that pick up a little bit. Still sitting about 5, a few points in the money. Hold on back here. Bear's trying to get something going. Was a test of 19.9. Which, by the way, reminds me, we should clean this up. Get rid of that original level here. All right, about 8-10 points in the red as it currently sits. At best on this trade so far, we have been, what were we? We were almost 30 points in the money. But again, I'm looking for a push toward 40 was my target. You start taking, it's really easy, by the way, in hindsight to say, you should have, or I should have, or you should have, or whoever should have, you should have taken it off. It was in the green. A really good way to give away your edge on a silver platter, because you're never taking things off when they're almost at your stop loss. You let them hit your stop, right? So I'm not interested in that unless I'm managing early for very good reason, which, by the way, I can manage early on this trade, but the way that intraday high is very near my take profit within 6 points, I think there's more edge for me in leaving it on and trying to hunt those stops if we can get a test of the intraday high. Well, back to break even on the trade. Five points in the green. I'll sit about 6-7 points in the money currently. And this trade's taking its time, 10 points in the money. ATR now sitting, it's actually crept up a little bit. ATR is now at about 22. So it's improving, which is good to see. Yet still just want to see a nice test of that previous, or I guess that existing intraday high. Use some of those stops to push us right to target. About 10 points in the money. Nice and slow. Range on that last bar was 16 points, so range is tight. So you gotta expect your setups to take a little bit longer when range tightens down like this. Couple points in the money. Break even on the trade-ish. You explain why you lean more towards negative reward to risk when ATR, average true range, is low instead of adjusting the ATM strategy to 30-30 or something. Yes, this is a very good question. The reason I do so is because I believe that personally, I think I have more edge when the ATR is low, when I lean more into negative reward to risk, because I'm giving the futures market, which is very efficiently priced, more room, and I'm making a smaller ask. So I'm able to get my win rate above the break-even point, which is edge. Right now, if I just tightened down to like 10 and 10, I would get chopped out too much and probably lose edge, because that's pretty tight. Even in a slow market like 10, 10, 15, 15, you know, as you get higher, it starts to get a little bit better. But the lower you go, you know, I've noticed that when ATR is really low, there's more chop in the market. A lot more of it seems to be noise. So I like to give the market more room and make a smaller ask. So I lean heavier into negative reward to risk, the lower ATR goes. And then at a point, it's just like below 10, especially, it's time to walk away. All right, so we are 17 points in the green. ATR currently sitting just below 20. Well, maybe at 20. $22 points in the green. And I want to see a test of that 37 region, which is the high of day. Though the bears certainly have an argument here for a little descending resistance. We'll see if that comes into play. If it does, we may have to manage early. So I'm sitting here, I'm thinking about this here. I want to see one more test. Again, with ATR this low, I have full permission to myself to manage this trade early with good reason to do so. Now this is becoming a better and better reason. The bears have this argument. So I want to see one more test here of the 28 region. Where's the test? I love the idea of hunting these stops at high a day, but if you can't get through, it doesn't matter. So I'm going to go ahead and place my take profit at 28.50, and we will attempt to manage that just slightly early. But right now, I'm not really looking to go any less than that. That would be about a 25-point winner. And I'm cool managing it there right now, so we'll see if we can get filled on that 28.50 region. All right, we're getting close. Couple points out. See if we can get a fill at 28.50. Got within a point, within a few ticks. There we go. All right, we're out there. We are out there. So we're flat. It's a smaller trade here. There we go. So we're currently up 17.47. Now again, that had it hit my 40 points would have been more like a, what, maybe 2,500 bucks, 2,700 bucks ish trade. But I'm cool managing that early. You know, the bears, the longer this went on, this really had a bear argument here at this descending resistance. It really started to develop. It had 3 touch points, and we got to a point where it's like we're getting really close to me being willing to enter short off of that trend line if we got like one more test. Now, here we are getting the test of 37. I don't care. That's fine. I did the best thing, and that probably would have hit us out at 43. Maybe it would have been a little bit light, but that's okay. I made the best decision I could in the moment, and you got to be happy with that, okay? So that's where we currently sit on the day. I'm not done. Let's see what else we can grab here. Nico, any advice on how to prioritize scalps on the 2-minute with a 5-minute play mentality? Do you break it down into smaller trades? Any advice on how to prioritize scalps on the 2-minute with a 5-minute play mentality? Do you break it into smaller trades? I think I know what you mean, but please explain using different words. I think I know what you mean, but I want to clarify. Okay, now what we should do here, we should really clean this chart up a little bit. I'm going to leave this for now. Okay. And you can see here, we did get 3 touch points, a little pullback, and then a push through. So a retest here wouldn't surprise me at all. We'll see if we get that. And then if we end up with another channel, I'd be happy to trade that. All right, I like to play 5-minute trendline breaks, but I see how you take 2-minute entry trades. I want to switch to scalps rather than waiting for the 5-minute. So the way that I would think about this is use your 2-minute as your baseline chart and use the 5-minute as supporting. And if you see a beautiful trade on the 5-minute, since the quantity of trades is lower on the 5-minute, but in that happening, the quality creeps up a little bit in comparison to the 2-minute. The reason I trade the 2-minute, it's like, well, why would you trade it if quality's slightly lower? Because it gives me a higher quantity of trades. You wouldn't believe it today and yesterday, but it does. Than the 5-minute does. Okay, so if I see a trade on the 5-minute chart, but it's not there on the 2-minute, I'll still take it. If I see a trade on the 2-minute, but it's not there on the 5-minute, I will still take it. But the 2-minute is like my lowest time frame that I'll take it on. I wouldn't take a trade in the futures market on the 1-minute chart because the quantity creeps up, but in my experience, the quality dips just a little too low. Unfortunately, I wish that weren't the case, but that is my experience. All right. This was not the case this morning, but it is now the case. Apex, see if I have the right screen. Apex is 80% off. They just launched this right now. 80% off, single day pass. It was just 50% off. Okay, use code BIG. It was literally 50 this morning. They just launched that 80% off single day pass, which means you can pass in 1 day, be funded tomorrow. Beautiful. Gibbs, all right, boys, made 2K and 2 fundeds, 800 in an eval, gonna take the profits and run. Have a great day. Wait, 80%, I might be back in. You know, interestingly, I'm not a big fan of looking back on trades, but for the sake of conversation, I'll take a quick peek. We did get that push with some stops. Now the high here, the high here was 944. On this bar was actually 943.75. I think my take profit was like 943 and a quarter. So I might have gotten filled. I might not have. But I made the best decision I could in the moment. I gave it time. Had good reason to do so. So I'm happy with that slightly early manage. Again, we got a little over 25 points on that trade, which is, I'm cool with that. Chris, if you were only going to run one account for a few months, no trade copiers, would you choose Apex or Take Profit? All right, my real answer to this, if I was only going to run one account, it would probably be 150K Take Profit trader account, just because the daily payout structure. And if you're only running one account, those daily payouts are really nice. Would this latest Apex sale take the position of best offer between them and Take Profit? Well, it would break down by account, okay? But the reality here is the higher accounts, I'm gonna take a guess. I don't have the numbers in front of me, so don't quote me on this, but I would guess like the 150Ks and up, Apex right now is the better deal. Below that, like the 50K accounts, Take Profit Trader right now is the better deal. If you use code BIG. I don't know about other codes, but BIG is always the best code at both. All right, here's the retest of that previous little descending resistance. Another retest. Kings says, I'm going to bite the bullet and try my first prop. Plan on running one 50K account. I think that's a great place to start. The 50Ks are straightforward enough to get passed and get funded. If you end up going with Apex, you can be funded in one day if you want to be aggressive, though. If it's your first prop, I'd probably take it a little bit slower. And the 50Ks are a good place to start, I think. The 50Ks are great accounts for everybody, really. All right, now again, we are retesting that previous little trend line. That's where we managed early, so very, very common to see retests like this. right. So if we look here, I'm going to get rid of this. Time to clean this guy up. No, I mean, yeah, I don't know. I mean, I think if you gave this to anyone on the street, I don't even know what they'd probably draw that, to be honest with you. But that's only 2 touch points. Going right through 2 bodies like this seems kind of unnatural for the average eye, which is the one you want to go with, by the way. You want to go with the most obvious way to draw it. You went up to 1,000 random people on the street, assuming they know how to kind of read a chart. What they would draw is what you want to draw. Don't overthink it. You defeat the purpose of doing so if you overthink it. Debo, is the activation fee the same across all accounts on Take Profit Trader, or does it get more expensive with the larger accounts? Debo, if you use code BIG, there is no activation fee. Now, the test fee is the only thing that you would pay. That does get a little more expensive. Well, it gets more expensive with the bigger accounts, but it's 30% off with the code. So, but once you pass, you don't have to pay anything if you use the code. If you don't use the code, you have to pay another, you have to pay double. I think it's 130 is the activation fee for Take Profit, which you totally avoid. Javaz, Nico, I currently have 20 Apex 50K evaluation accounts. Could you please share any advice on how to successfully pass them? I appreciate your expertise. Thank you in advance. Okay, so this is a very difficult question to answer without understanding the context. By the way, I'm watching this. There's a very real argument here. I'll get back to your question in a second. There's a very real argument for a descending resistance, so I'm watching this. However, this could very easily turn into a continuation sequence, but I'd have to see us push without a doubt outside of this, because again, I know the market looks like it's trending upside, even though it's still red toward 20K, but this is still a range market. So you got to think of it like a range market. Which, by the way, you know, on that last trade, I think there were a couple of questions. If I buy an ascending support level and we get a few rollovers and the support level goes higher, but now we're trading below the ascending support, the way I think about this is I had a reason to enter, and if we're in a trend, if we're in a range market, if we're still in the low end of the range, it's still relevant. Okay, but if we were not in a range market, that trade would have had to be managed differently. I can't tell you exactly how differently because it would depend. There would be a variety of situations. But being in a range market, that's why I manage it the way I did. Okay. Any advice on how to successfully pass 20 Apex 50K evaluations? Here's the reality of the situation. If you are somebody who's taken plenty of payouts, your business model is laid out, you understand kind of more or less the return on the investment that you get. I don't think it makes sense to spend a number of days or weeks in evaluations because the opportunity cost is too high. The evaluations are too inexpensive to spend too much time on them. So, like, I can only tell you what I do. For me, at this point, I trade evaluations very aggressively. Okay. For somebody who hasn't yet gotten to the point of like taking payouts, they're not really sure of their business model, which by the way is fine. Not talking down to those people. We're all at different points, right? And you'll get there. But if you're a little earlier in your journey, that's just where you happen to be, I don't think it makes sense to push so hard and just ramp up your expenses because you haven't really shown a return yet. Okay, now if you're showing returns, you can ramp up the expenses a little bit because the ROI, it doesn't matter. The opportunity cost is more expensive than the expenses. But if your expenses are still more expensive than your opportunity cost, then you should spend a few days and trade smaller in the evaluation accounts, risking more so what you would risk in the funded accounts. Okay, now you probably have an idea of where you sit as far as how you would trade the funded accounts. If you're earlier in the journey, trade it that way. If you're later in the journey and the opportunity cost is more expensive than the expenses really could ever be, I just trade them aggressively. But again, that's probably not the right way to do it. If you're newer, I can only tell you my truth. Good morning. I've heard you say you use negative risk to reward. Well, negative reward to risk, and only sometimes, not always. How does this work regarding lot size, contract management? For example, how many minis do you use for a 50K account? I trade the micros, because with prop, I think trading the minis is too big for almost every account, except for maybe the 250, 300K Apex accounts and some of the bigger accounts across different props. Micros, I trade the micros. There's nothing wrong with trading micros. I prefer to scale it horizontally and shoot for just more accounts over time, rather than scaling vertically and trading big in the accounts. So right now, well, if we look here, I'll actually just show you. See the size? That's the size across these accounts. That's how many micros I'm trading per account. Vision, how do you define a range day based on lower ATR? Well, there's a few different ways. Lower ATR, sure. A lot of wicks. Like you try to get a push upside, it gets wicked back down. You try to get a push downside, it gets wicked back up. But more importantly, the market inertia, the bottom of your screen, that's the daily chart. We look at that every single morning at the beginning of the stream when we're doing business. Business first before social hour. That tells you. The market inertia really tells you. And lately it's been, well, really all the time, it's going to be at least 80, 85% range days, and we're in range market right now. A trend market becomes pretty clear when that starts to form on the daily. And by the way that I'm looking at that on the daily is you see smaller ranges, quite a few wicks. You get like what looks like a trend day mixed in, and then the next stage is wicks, smaller range market. Okay, so Zach, to answer your question, here is the test, and you guys just saw that, right? You saw that, right? We got the test on one big red bar, not controlled, and we get the rollover below the trend line. So no, I don't buy channel scalps, or I guess I don't take channel scalps long or short. If the test is on a big bar and then the rollover happens as we test it, because then the rollover is beneath or above in a descending formation. And a lot of times you start getting this. Okay, so I prefer to take channel scalps while the bar is open, if that makes sense. I know it sounds arbitrary, but there is, I mean, there's a reality behind that. You roll over and now the bulls are like, whoa, wait a second, this is super obvious. I don't know if I want to buy right into there. Now, sometimes we'll end up in that scenario in a trade, but I don't want to enter and immediately put myself in that scenario. I'd rather deal with it later. Andy, well, mate, do you trade live every day? Yes, I am live every single day, 8:15 a.m. Central Time until at least 11 Central at a minimum. Num, what's up? Been here for years. Since back in the voiceover days, a long time ago. MB, does 150K account like today use micros or minis? Well, it depends on your business model. I use micros. You know, there's different business models for prop trading. You can trade minis. You're going to have higher expenses. You might end up with a couple of massive payouts, but you're also going to have, again, a lot more blown accounts because statistically speaking, the way that I think about the business model is the bigger you trade, the more often you're going to cycle through accounts. Now, there's nothing wrong with that. Everybody seems to think that that means that you're some garbage trader if you cycle through accounts more often. I prefer not to trade that way. That's not necessarily my business model, but I'm also not trading one micro. Okay, so there's different ways to make the numbers work. You want to be more aggressive, have higher expenses, and then try to get the same ROI? Or do you want to scale horizontally, trade a little smaller per account, end up with just more accounts over time? On average, you'll hold on to the accounts a little bit longer, and you can still get plenty of payouts. It's just, I don't think one's better or worse. It's just how do you want to run the business of your prop trading? Everyone should have a business model. It takes 10 minutes to write it out. All right, we've got 1 minute and 8 seconds left here on this bear bar, which I'm very interested in. However, the bulls are stepping in, trying to create a little reversal sequence. We'll see if they can pull that off. By the way, we are right now at the test of the 20 EMA on the 5 minute. You see the bulls here. They're definitely trying to put in a little reversal. Holding up on that 20 EMA on the 5. A big, equal-sized body or slightly growing bear bar here, closing at its low. I would have sold the rollover, which is coming in 5 seconds. But the bulls are stepping in. We're just not seeing that entry. Well, let's clean up a little bit. I like to clean up my charts as soon as I can. Just keep everything looking clean. I think if you have too many lines going, at least for me, it starts making you see things that you don't necessarily want to see. I try to keep my charts as clean as possible. I just have the 20 EMA on there for context. That's it. Michael just got funded. Good work. Good work. Congrats. Is that the first funded, or are you a seasoned vet, Michael? Second funded account, working to get profit for payout on the other one. Awesome. Good work. Good work. See, the beauty of prop is once you have two accounts, well, unless you're trading them separately, but once you have everything set up where you have, you know, two or more accounts and you're copy trading them, the scaling is relatively simple. The only thing that you have to deal with, the more accounts you end up going with, is any copy trader issues become more that you have to watch. But once you have everything set up with multiple that you're copy trading, even if you're copy trading them in groups, you're pretty much good to go as far as scaling. We are holding this 5 on the, I'm sorry, this 20 on the 5. See here, there's the 20 EMA on the 5-minute chart. We're holding it up. See if the buyers can keep holding that there. Aaron, were you nervous at any point during the trade today? Well, you have to care, I think, more than I do to be nervous. Which sounds ridiculous, but that's the truth. The result of any one given trade, I just don't care. I don't care, because there's going to be both. You're never going to have all winners. You're not going to have all losers. If you have a little bit of edge and you can prove that to yourself through the data when you look at it, it just doesn't matter. And the more trades you take, the less you give a shit about any one given trade. So, being, you know, the shakes, the nervousness, we've all, like, obviously been there, but it just, the more trades you take, the more data that you have to prove to yourself that, okay, I have an edge, you just stop caring as much, and it actually gets a little, I hesitate to say easier, but being in the trade and being patient does get easier the more you prove to yourself that you have an edge. Which is, you know, it's a little backwards, right? It's like you need that confidence in the early days when you don't know that you have an edge, which is why trading is so hard. Because it's backwards. You get all the luxuries of not caring as much later. And in the early days, you kind of have to fake it to yourself. Now, the easiest way to do that is to fake it to yourself or borrow confidence from somebody else's setup for a few weeks until you do have data, and then you actually have traction. Until then, you're just spinning your wheels. And most people never get out of that, spinning their wheels. Here we are, testing the 5-minute 20 EMA yet again. Alright, Chris, Nico, would you still look at that flat bottom at 880? I don't see one at 880. I see the flat bottom more at 890. But yeah, I'm already watching that flat bottom around 890. I mean, you look here, let's look at the 5-minute. I'd say there's a flat right about there. But I gotta tell you, not too much of a clean setup coming into it, really. A lot of wicks. You see all those wicks? Kind of ugly. All right, there's a push down through that flat bottom. That was good for maybe just 5 points. ATR is now at 18, by the way, so it's tightening down a bit. Yeah, old school. You read my mind. A nice clean bear bar here, closing near the low. I would slap the sell button on that rollover. But bulls are stepping in here, trying to again range market, very representative of one. Anytime you get one direction moving a little too hard, the other side likes to step in and at least try. Okay, now, it's kind of interesting. I got to tell you here. Let's look at this 2 minute. I'm starting to kind of look at this. It's not set in stone yet, but this has potential. Now, if I were trading evals right now, I would probably start hitting this after one more retest. Depending on how clean it was. If it ended up being an A setup, I would hit it in everything. But if it were a B, B plus, and above, I'd hit that in evals, no problem. Which I still gotta get that video out for you guys. Just show you how I trade evals. Which, by the way, is probably not the best example for like people who are a little bit early. Because I trade them aggressively, again, because the opportunity cost. But, whatever, all I can do is show you what I do. All right, we are retesting, if you look here. We're retesting the 20 EMA on the 5 minute, and we're coming in close for a test of that trend line. Again, it's not set in stone. There's one, maybe two touch points there, so I wouldn't just short that immediately. I want to see this test here and how this reacts. Then we can make any necessary adjustments and then watch it from there. Higher high. Why does my eval account have auto liquidation in place? Well, auto liquidation should only occur if you fail it. So did you fail it and you don't realize it? Did you have a position on that you didn't know you had on or something? That's my only idea from there. Otherwise, you might have to reach out. And Nico, what's your best advice for management on an Apex 50K funded account, a PA account? One micro until halfway or other? That's not a bad idea. Me with 50K Apexes, I usually start and oftentimes stay. And you can see we're getting that rejection. We might have to make one little adjustment to the trend line, but I would love to see this clear that recent low and then make a retest. I usually start my 50Ks with 3 micros, and then oftentimes I'll just leave them there. But if you're somebody who scalps a lot with maybe a smaller edge, you would probably want to size that down. And by a lot, I mean like, if you're someone who takes like consistently 30 scalps a day, but your edge is a little smaller because of that, which is not wrong, by the way. That's absolutely fine. I actually enjoy trading that way a lot. You have to look at your stats, right? The probability of going on a losing streak with that many trades with a little bit of a smaller edge is higher. So you have to figure out the probability, okay, like in any given week or any given month, what's the probability based on my win rate and my average reward to risk ratio that I blow these accounts? You want to know that. Now, there's actually a place you can figure that out. It's a website. I have no affiliation. I don't know who coded it, but it's a great site. I think it's called coda.io, coda.io. Google that space equity curve calculator, and it'll run up to 12 simulations with up to, I think, a 300 trade sample size per simulation. So you get a great sample size that gives you the probabilities. Now, in real life, you have to see if you can maintain the stats that you put in the thing, right? It's not just going to tell you the answer. You have to maintain the stats that you claim to have. But I think it's a great place to start and try to figure out your size, because you can mess around with the size per trade too. I'll make an adjustment here. Yes, Diesel, I'm live daily, every day, 8:15 a.m. Central Time until at least 11. Higher high. My eval was 25K, which means 1,500 and 1,500. I was only down 500-ish from last week, so coming into today, the value was above 24K. Yeah, higher high. I would bet what happened was last week you had a trade that went a certain amount in the money, which dragged your trailing drawdown up, and then you pulled back, and your realized P&L was lower than your unrealized P&L was at one point. So now today, it sounds like you might have hit that trailing drawdown. Could be wrong, it could be an error, but I would expect that's probably what's going on there. All right, guys, well, you know what I'm watching here. Now, good news. Again, it depends on the size account. For the smaller accounts, here's the reality. Take Profit Trader for like the 50Ks is probably going to be the better deal. Daily payouts, 30% off, no activation fee. Use code BIG. Best deal always. But Apex, literally like half an hour ago or an hour ago, something like that. They just went from 50% off. Apex is right now 80% off. Single day pass if you use code BIG, which is a great deal. The highest they ever go is 90, but that happens very rare. 80% off is a great place to make the business model work better. And they just launched that, which is exciting. So I'm watching this descending trend line, but we are so tight forming this little flat bottom. If we could get a nice push downside hard, clear these lows, come back up for a retest, then I would think about that unless this pushes right through, in which case we'd have to start looking for cleaner setups. So, all right, guys, I'll tell you what, live every day. If you're new here, subscribe to the channel. I'm live every single day, 8:15 a.m. Central Time until at least 11 Central Time. So, stay disciplined, stay patient, put on your A setups, gather your data, borrow confidence in the meantime. And once you have that data that says, hey, I am who I say I am, I have edge, the more I trade, the more money I make, then it's off to the races and you can scale. But you need that confidence. Seriously, you got to get that confidence from somewhere. So in the early days, in the early weeks, it doesn't have to take a year. Trade small, gather your data, look back on the data. When it starts to work, you'll know what setups work for you. You'll have the confidence, and then you can start to push. All right, guys, have a great rest of the day. I will see you tomorrow morning, 8:15. Have a good one.